Hi. So after today's 643-point rally in the Dow, I'm sure everybody is wondering if it's safe to get back into the water. And for the very short term, it does look like the bounce will continue up to about 16,750 or even 17,000. It's a tremendous move from 15,250 to 16,279. We're over 1,000 points higher already. Another 500 points would be about a 50% retracement of the move down. I don't think that anything has been fixed. Nothing has been repaired. All the problems remain. Social Security insolvent, insurance, the disability fund insolvent, the post office insolvent, the Amtrak is insolvent. I don't really know any major institution that's doing well except for those that are protected, like the healthcare system, the defense industry, and the banks. It does look, though, that they've been able to avoid the cataclysmic collapse that seemed to be pending. I still think it's coming. I do think they were heading a lot lower, but it looks like this is the bounce that we were waiting for. As I said, I'm projecting 16,750, maybe even as high as 17,000. It's an opportunity to reestablish positions. Totally flat right now, so I'm actually hoping for a rally. But keep in mind, nothing has been fixed. Everything is as it was. The signs of desperation are clear to see. The Fed today did not say, I think it was Lockley who spoke, did not say that QE was coming. But if the market had continued lower today, I think QE4 would have very definitely been on the table. It's kind of amusing that the market is almost acting against its own self-interest now, because if the market continues to rally, then the Fed may feel that the threat of a small rise in interest rates has already been absorbed by the market. But the market is almost like a feedback mechanism now. It has rallied partly because the fall in the market has caused the Fed to pause in their enthusiasm for raising rates. And now that they've essentially taken the raising of rates off the table, the market is rallying again. The rally may in fact bring the rate increase, so it's an ironic conundrum that the market is in. If the market falls further, then rates won't rise, probably, whereas if the market rises further, then rates will increase, probably. So the summary, I think we're heading higher short term, but it's an opportunity to reestablish short positions because the problems remain, and I just don't see any effort from either Republicans or Democrats to address them. We have given our faith and trust to the people that we elect to represent us, and our faith is that they will do what's best for the country, and our trust is that they will put their own self-interest aside and do what is best. However, if you've been following politics for any length of time, you can tell that the self-interest is so blatant. The revolving door between government and private industry. Regulators leave their posts regulating banks and go to work for banks thereafter. It's unconscionable. In any civilized, normal society, there would be shame and embarrassment at being so cravenly and openly corrupt, in my opinion. That's the sad news from today, but the good news is the market looks like it is on the rebound for now. I'll keep you up to date. Best of luck.